Good afternoon, everybody. Welcome to Trader Merlin Show for your Wednesday afternoon. It's hump day, and the numbers are in for Nvidia. I will go to that in just a second. Thank you guys for the feedback on the show. I reconnected things, restarted everything, and hopefully that cleared up a lot of the issues from yesterday. I'm not sure why that happened. But, and Mark, you thought I was using a wireless mic. No, I've got a Yeti microphone sitting right here, a nice big Yeti microphone, just out of view. It's right there's the top of the microphone. So it's actually a pretty good microphone, but maybe I need to check in the settings on that because some people say it sounds like I'm on a wireless mic. Nope, not a wireless mic. All right, let's dive into these numbers here, and I'll give you an idea what the program is going to be like today. Number one, we're going to talk about Nvidia, break down the earnings. We'll look at Nvidia's chart and kind of get a sense as to what happened with them. Why was it less of an impact? Number two, I'm going to go into the Digital Asset Subcommittee. Now, there was a congressional testimony today with 4 members in the crypto industry, one of which was the legal counsel from Kraken. Others were like hedge fund managers and things like that, legal side. And I'll give you the TLDR, the Cliff Note version of what happened there and kind of what it means for digital going forward. And then I received an email from one of our regular listeners. He just was at the podcast up in San Jose, and I wanted to address his bullet points on, I guess, my talk track and my perspectives on Bitcoin. So I'm going to dive into those because there's one comment in there. I definitely resent the comment, but we'll get to that here, and I'll explain everything, so hopefully there's clarity, because I certainly don't want any misconception on where I stand with regards to digital assets and suggestions. So let's dive into earnings. I have multiple graphics here. I've got the one here of Jensen Huang with the a really nice smile on his face, and he looks jubilant. He's having a good day. And then there's the other side of this, which is maybe it's this Jensen that we're dealing with. So I'll dive through these numbers one by one. I didn't get a chance to listen to the conference call after, which I wanted to do, but I've just been pretty busy. So we'll just look at the numbers, and then maybe some of the details will start to come to the surface with regards to individual customers, technology, and things like that. So here is where we'll start with the key data numbers. All in all, Nvidia looked pretty good number-wise. In a nutshell, just to start, estimates were right around 84 cents per share. They came out at 89 cents per share. So that's a beat on the earnings. And of course, when you're dealing with that kind of scale and growth expectation, to come out with those numbers, pretty good when you're beating the market. But what are some of those other numbers? Well, these are the Q4 data. Q4 revenue was $39.3 billion. That is a 78% year-over-year growth. That's just phenomenal. The expectation was they're going to come out at $38 billion. So they absolutely destroyed their earnings numbers. I mean, absolutely, with regards to revenue, just crushed it, right? They beat expectations by $1.3 billion. Hello, I think that's pretty darn good. Second piece of their Q4 was their adjusted earnings per share. Again, they came out at 89 cents versus expectations of 84. So far, this is smiling, Jensen. Great, yay, amazing, but we're not done yet. Data center revenue. Now, that was expected to be $33.59 billion. And they actually came out at 35.6. And again, that's 93% year-over-year growth. I remember working for a company, and we got 40% year-over-year growth, and you're patting yourself on your back. You're like, this is really, really good. Phenomenal numbers to have, that kind of growth year in and year out. And it just goes to the discussion we've had many times, which is it's not a monopoly, but they clearly have a huge advantage over any competitors for now. All right, we'll see if we can get other factories built up that might compete with them. But for now, they still have huge competitive advantage. So that data center revenue, which I think is going to continue to grow. I think more and more people are going to not want to house these Blackwell chips, and they'll have Nvidia manage it all. That's going to get more and more. But they beat that by $2 billion more than expected. I mean, these are not tiny numbers at all. Other data. Here's their Q1 revenue forecast. So this is just going forward. What's the expectation? Nvidia said that they're looking to make $43 billion in Q1. Wall Street estimate was 41.78. So they're already raising their forecast above Wall Street's expectations, which is gigantic. And their gross margin forecast. This is the only one so far that I've looked at where you go, okay, you're coming up short. You give me those first 4 numbers that we covered already. That's a winner all day. All day. Their margin forecast. So their gross margins are expected to drop. Wall Street's estimate was 72% gross margins, and Nvidia saying, 71%. Look, I'll take a 1.2% miss on gross margin forecast if you keep bringing numbers on revenue and EPS and all these other costs, or all these other growth numbers. that all just seems absolutely fantastic in my opinion. Great news from Nvidia. Now, I did a poll earlier before we started the show, and let me check and see exactly what that was. I don't know what the final tally was, but I will share that with you in just a second. There it is. All right, so here's our poll for today. I said Nvidia earnings will, A, save the day. Oh, I spelled create wrong. Wonderful, Merlin. Can't even spell. That's what I get for going too fast. Number 2 is create panic and have no impact. 10% of you said have no impact, and I think we're pretty much there with the no impact side of things. 28% said create panic. 61% said save the day, and here we are. Here's your after hours chart. What was noteworthy for me was that first 60 seconds. I'll bring up to a 1 minute time frame here. And look at that whipsaw. You had this huge move up and then just came screaming back down, continued to sell off. So really the first 3 minutes were gigantic volatility, and at the end of it, not a lot of change. And here we are now slightly ticking higher and slowly moving to the upside here. So all in all, in the after-hour session, Nvidia's up 2.16%. So it is going to have an impact. Let's go look at the NASDAQ futures here. You can see the NASDAQ futures are slightly up as well. This is pretty much the exact same picture as Nvidia. I mean, you can almost overlap. I wonder if I can. Let me see if I can overlap the Nvidia on top of this, and we'll see they should be like absolutely lockstep. No. It's going by percentage move, so unfortunately, it's not going to look the same unless I switch the axis here, but I'm just making it worse by doing that. So far, looked good. Now, I think what will be the telltale will be tomorrow morning. Once we get through all of the press releases, all the conference calls, all the analysts can kind of adjust their positions based off of some of this just fantastic economic or earnings data. There's a lot more to it than just this, obviously. These are just the big numbers that I managed to get and get ready for the show here before we took off. Now, again, I think tomorrow this will be very telling. What does the market react to this one? What does the retail population do? Now, I don't watch CNBC or Fox or Bloomberg or any of those shows. I'm sure that this right now is probably the talk of all of those programs. And these conversations that Maria Bartiromo and Joe Kernan and Jim Cramer have about Nvidia, those steer people's perceptions. So they'll start to get their own opinions about where it's going to go. Depending if those analysts create FUD or optimism, we could see bigger moves tomorrow morning, and that could be a catalyst for today's market. So I look at the numbers. I think it's great. I saw Big Eb said here, 175 to 200 Nvidia for the next 12 months, in my opinion. If you look out at the daily on this bad boy, one sec, I'll bring up that chart for you. Here it is. 170 to 200. Well, certainly, I think we got to look at the all-time highs. I mean, that's your first estimate is going to be the all-time highs, which is right here, 153.13. So for me, I look at it as that's got to be my next challenge point, right? The next area I need to shoot for is that all-time high. So I think that over the next week or two, I think you'll get back up to 140. I do think that optimism will prevail here. And in light of all of the pessimism and worry about this space, about Nvidia, they posted phenomenal numbers. So, climb that wall of worry and prove them that you're a winner. And that's what they did. So I think that probably by next week we'll be challenging that 140. I do think over the next few months we'll drift higher and break all-time highs. Getting to 170, 175. Let's just put it in here and try to put that in perspective from the big picture. And I'll put this red line at 175 so we can see kind of the bottom end of what Big Ed was anticipating. From current levels to get to 175 for Nvidia would be a gain of, actually from the close of today, that'd be a gain of 33% for the year. I don't think that's out of line. Nvidia certainly can do it, but it's going to take some heavy lifting. It's going to take continual positive thoughts on AI. It's going to take continual capital expenditure from Microsoft and Google and Amazon and all these major players that are consuming these Blackwell chips. And in reading some of the comments that Jensen Huang had made, he said just absolutely incredible demand for their Blackwell chips, which is great. That's a whole new product line. And while they're selling those ones, they're working on a new chip to be even better than the Blackwell chip. So I kind of was hoping it would sell off aggressively and have a big dump so I could buy some at a much lower price. Put Big Sam on and he'll get you a beer if he doesn't. Oh, all right. I'm going to put you on here, Big Ab. Let's add it on there. We should start doing this more often. Unfortunately, what will happen is we're going to have just charts that are totally cluttered with people's names. But let me go and add Big Ab. I still owe you a beer. Big Ab, and that was, let's see, 175 to 200 by, let's go, what do we have? We're 2/20. Are you saying by the end of the year, Big Eb, or by the, in a year? I use it for the next 12 months. Okay, so I'll put by 12/26/26. There you go. This line may stay on there a long time. I think he's right. I do think he's right. But, certainly things can be derailed. This industry could have some problems. You could see some slowdowns. I heard, was it Microsoft? I think Microsoft is canceling a contract for a lot of its data centers, which leads me to believe they might be cutting back on some of this expansion. So we will have to wait and see. But all in all, I think today was not only a good day for Nvidia, but I would say a great day for Nvidia. I was really a little surprised to see such a muted reaction. And I still don't quite understand why we're not seeing more optimism here. Maybe people feel like this was already priced in to Nvidia's share price. That's a lot of whipsaw there with not a lot of real conviction. Only up 2% on posting those numbers seems like you're selling Nvidia short. It just seems not good. If you're betting big ass money, good. 2 beers is good too. Sure, we might have to call an Uber, Big Ab, at this rate. Let's see. I sold the 180 calls Nvidia for March 7th. Wouldn't hurt my feelings to get called out. Yeah. You sold the 180 calls. Great, Steve. I mean, that's to get called out by March 7th. Man, I hope you got some premium. It seems like you wouldn't get a lot of premium for that strike price, but yeah. Good. That's right. You've got you're long on Nvidia. I remember. Let's see. Just the opposite of Kramer. What do you think Nvidia will do if we get a true market correction this year? Again, Lisa, that's all subjective. It's just my opinion. I think that if out of all of them, tech will probably weather the storm better. I think tech's going to weather the storm, particularly because of its implementation of AI. So I'm thinking outside the box here that if let's say we start to go into a really rough financial patch here in America and things start to get really bad and companies start to do layoffs. When they start to do these mass layoffs, at least from my perspective, and I could be totally wrong, I think it would drive a lot of these CEOs, business owners, to start looking at how can I use AI in this next move up to better my business. I got to get rid of employees. I hate to do that, but let me go and see what AI might do. And I think it might drive more businesses to look at things like Nvidia or the services provided from Google and Microsoft and their AI platforms to maybe augment their business. So I think that you will still get consumer demand for the products and services with regards to AI more so than some other things. For example, do I see Darden restaurants, booming? Well, no. If we go into recession, I think restaurants in general might start to fall because people might be eating more from home. But I think they're still going to be consuming AI and the AI products. So I think that this will not be recession-proof by any stretch, but I do think it'll probably fare better than most of the broader market because tech is just at the forefront of everything we're doing right now. I mean, we were a manufacturing country long time ago. We don't do much manufacturing anymore. Then we're a services country. And now I think we might just become the leader in AI and digital assets. So too many short-dated call, only 40. Ooh, yeah. So let me go into the next piece here, and then I'll run through the markets. I want to get to these crypto comments just so I can clear the air because it just felt like I was, one comment threw me a little bit. So if you haven't watched it, you should watch it, which is this Digital Asset Subcommittee. I did post a link to it on my Twitter feed. You can watch it. It's not live anymore, but you can watch the recap of it. It's about 2 hours. And it was this Digital Asset Subcommittee headed up by Cynthia Loomis. Now, I've mentioned several times, this is one person you should be following on social media. She is championing the digital asset kind of frontier for the U.S. And she's certainly a pro-Bitcoin piece, but that's not why I'm interested in what Cynthia Loomis is doing. Cynthia Loomis is, in my opinion, one of the sharper politicians with regards to understanding digital assets and their impact. Now, today's session, for those of you, even if you're not into crypto, was very important because it dealt with looking at the stablecoin issue. How do we create stablecoins? What's the regulatory guidelines for it? And I've mentioned this before, and I think that this is going to be a much broader topic. And Bill Addis has talked about this as well. China used to be our number one buyer of our bonds, right? They would gobble bonds up. Now they're not. Japan used to be a huge buyer of our bonds. Now they're not. The biggest buyer of our bonds is the Federal Reserve. So this is a bad cycle where the government runs up so much debt, The Treasury Department issues the bonds so we can raise enough money to pay the interest on the debt, and then an agency that's not a government agency, the Federal Reserve, prints money out of thin air to buy that debt. I mean, this, in many cases, some people would look at this and say that that's a criminal, what you're doing. Bottom line is we need to create buyers for bonds. And I think I may have mentioned this before or given you an example. If I haven't, let me know, and maybe I can spend some time to show you how this works. But, I mean, if you want to make billions of dollars per year, start a stablecoin. It's very easy to do. You create a stablecoin product, which I can explain how to do that. And then you release it, right? You release this and people buy it, and you could even incentivize them by paying them an interest rate, give them some money. Now, the problem is if we look at different stablecoins, for example, you have what are called commodity-backed stablecoins. So you have things like PAX-G, which is a stablecoin that tracks the price of gold. You have some that are crypto-backed, like DAI. DAI is a stablecoin that's supposed to stay at $1, and they use Ethereum to fuel that stability. You have algorithmic stablecoins like USDD, which is Tron's stablecoin. There's nothing backing that. It's just simply a computer algorithm that keeps price at $1, depending on how many buyers or sellers there are to adjust the number in circulation. And then you have asset-backed. Now, some may be backed by equities, but the real way that we should be doing it as a government is creating a stablecoin that is a pie chart. And that pie chart is, let's say, 25% cash, meaning if you got $1 billion, 250 million of it stays in cash. It cannot be in anything else. It has to be in cash. And the reason you have it in cash is to be able to transact redemptions. If a customer comes to you and says, hey, I want my money out immediately, you know you've got 25% of all the money that's been deposited liquid. Our banks don't even have 25% liquid. Our banks typically have between 5 and 10% reserves. Now it's 0 because of what happened with COVID. It still hasn't been changed back, but it's still 0% reserve requirement for banks, which means that every deposit they can lend out 100%, which is a huge systemic risk. In this proposal, I'm saying you keep 25% in cash, and then the other 75%, you buy bonds. You buy maybe 3-month T-bills, you buy 2 years. I wouldn't go anything past 2 years. And therefore, you're earning yield on that. Right now, you get about 4% on it. So I buy $1 billion worth of these bonds, and I'm earning that yield. You'll be making 4% on $1 billion, and that's yours to keep. That's what happens with USDC. That's what happens with Tether. These guys are making billions of dollars by creating a stablecoin. Now, Tether, instead of using government bonds, they're using corporate bonds, junk bonds, and that opens up a whole level of risk, which we as the U.S. don't want. So, long-winded answer there, and if you have any questions, type them in the chat, and I'll further explain that. But this subcommittee today went through a lot of explaining that. And one piece I really thought was interesting, USDT would be, USDT Tether is pretty much the same as USDC. However, Tether is run by a Chinese company, which of course the US would not want to keep that as our stablecoin. Tether also has like Evergreen or Evergrande, whatever the giant home builder is there that people think is going bankrupt. They have those bonds, right? So what you don't want to do is have individual company bonds in that portfolio of a stablecoin because it brings on too much risk. So what will happen, and this is what I believe this subcommittee is going to agree upon, is, okay, you have to have X percentage in US dollars, and you have to have X percentage in government bonds, US government bonds that you can only buy from the government. Because now what you do is you create a buyer for government bonds. So you're helping out the government, and you're keeping all the money in US dollars, which further establishes the US dollar as the reserve currency of the world. So this is a win-win for government if structured correctly. Now, we don't know what the final outcome will be, but I certainly watched this whole thing today, and a lot of the talk track was about how this creates buyers for government bonds. If you make it where these stablecoins have to have government bonds, it's a win for the government, and I'm pretty sure they will pass that one. Lisa says, why do other countries buy our bonds if our administration keeps promising 25% tariffs or any other crypto coin we could potentially create for that matter? I think some of it is they do business in dollars and they've got a bunch of dollars, so they'll just buy government bonds and earn a yield on that capital. That's part of the reason why. Spread around investments. U.S., as much as I badmouth a lot of what our politicians are doing, we still are one of the more stable governments around the world. I cringe when I say it because it seems like we're not, but compared to some other governments, we are. So as a country, it's probably in your best interest to have assets or investments in the more stable, secure countries. Like, I'm pretty sure that China is not going to all of a sudden switch us off and go, oh, let's load up on Kazakhstan's bonds. All right, let's make big capital investments in Kazakhstan. Right? Not very stable, a lot of uncertainty. You go with the big one. So I think part of it is having a piece of that market, the safety and stability of that government bond as well. Robert, I'll get to that one in just a sec. So yeah, there we go. So I got your USDT is an asset-backed. USDT is cash, bonds, corporate bonds. But the challenge here with Tether USDT is they're hiding things. We don't exactly know what they're holding. And let me give you a quick example here just to put it into perspective. Let's go to CoinMarketCap. And I know there's some people here who are new. Type into chat, how much money do you think is in Tether? Tether is just a stable coin, right? It's designed to stay at $1. So think of it like a digital dollar. And every time you buy $1 worth, a percentage goes into cash, a percentage goes into bonds, etc. How much money do you think is sitting right now in Tether? And don't look it up. I'm just curious what you guys think. There are a lot of people, you hear the word stablecoin, like, oh, it's new to me. I don't really know. Nobody's using these things anyway. Not true. There's big money in it. And I'm waiting for some chat to come through here to type in how much, because I want to create some graphics for you and show you a couple different things. Let me make a new slide, and I'll draw on the screen for you here in just a second. And, all right, so I got that done. What did you guys say? Thank you, Jess 10X says 2 billion. Steve Wolf says 7 billion. I'm going to blow your minds right now. Here is Tether. That's $141 billion. 141 billion with a B, folks. That is a lot of money. Man, I'm surprised. Some of you guys didn't even come close. Like, not even remotely close. 10 billion was the highest on there, and that'd be, less than 10% of it. 141 billion right now is sitting in Tether. There you go. Big Eb's is the closest, right? So you can see here it says market cap 141 billion. We know it's, it's $1 a piece, so $141 billion there. Now, you heard me say earlier, well, you could just make yourself a multi-millionaire. If these guys go out and they buy, let's go to, I'm going to go up and show you the current yield curve. And we'll bring up the current yield curve for the United States. Here's your yield curve updated daily. And look here. I've got the 1 month, I can get 4.29. Okay, 4.29%. And I think we'd all agree, no. I think we would all agree that I could pick any maturity and 4% would be logical, right? I don't think anyone here is going to second guess me on that one. I can get the 1 month for 4.29, 1 year for 4.1, the 2 year for 4.07, 10 year for 4.25, 30 year for 4.5. So I think you guys would agree with me that if I said I'm going to put 75% of that bond portfolio into shorter term bonds at 4%, I'm not exaggerating anything, that'd be legitimate, right? You guys think that'd be okay? Go to 140 billion. So let's go here and show you if we took 140 billion and I bought 4% bonds. No. That's incorrect. Hold up. Hey, 140 billion. There's 140 billion. So that's thousands, hundreds, thousands, millions, billion. And times that by 0.04%. That is $5.6 billion. That's $5.6 billion just in interest for doing literally nothing. All they have to do is just sit back and make sure when someone buys $10,000 worth of Tether that these percentages get allocated and they have, a percentage in cash and a big chunk in bonds. This to me is the easiest way to make money. This is a no-brainer cash cow. All you have to do is don't screw it up. So if you're Tether, right now Tether is at risk of losing their dominance because the United States, when these rules go through, they're going to push away from China. They're going to push away from Tether. They'll probably say, if you want to be a stable coin that does business in the United States, you have to be an American stable company, and you have to buy US dollars and you have to hold U.S. government bonds. Those will be the rules, right? I'm pretty sure that's what's happening within 6 months. Well, if that's the case, then let's go back here to the next biggest one, which is U.S., and that's USDC. USDC has $56 billion worth of investments. So I think you see where I'm going with this. I mean, that ends up being $2 billion a year in interest alone. Just interest without even making risky investments. This is good business, right? Most become USD most stable. But the Silicon banks went bankrupt because of bond inversion, so needs to hedge. Right, and I think the rules will be your bonds must be a specific duration or less. Right? Specific duration or less. And the reason that they went under, keep in mind here, Chad, is they were paying customers interest and then taking that money and buying bonds and getting the yield, and that flipped. With stablecoins, they don't pay the customer interest. This interest goes to corporate. Now, some will actually pay interest. So if you look over here, for those of you who might like Coinbase, I'll bring up Coinbase for you. And you can see here on Coinbase, when we go to portfolio, you can see right here at the top, I'm trying to zoom in, it says USD, right there, USD, there's no interest. But if I go down here, USDC, which is the stable coin, you can see 4.1%. So if you hold USDC at Coinbase, you'll earn 4.1%. Now, this is obviously held at Coinbase, so it's technically their money, but you're earning pretty decent capital just to have your money in a stable coin with Coinbase. So anyway, this will be a much, much bigger topic going forward. I think it's fairly exciting because it's changing the course of how businesses are going to work. At a certain point, we'll start to have much more payments done electronically. You can make payments with stable coins. And I don't know if you guys saw Moynihan, who's the CEO of Bank of America, was on TV today. I just saw the clips of it. And he says, look, we haven't touched stable coins or cryptocurrencies because the government and the Fed have said it's bad. Don't touch it. We're not going to cross those boundaries. But now the government says it's okay and the Fed says it's okay. He's like, we're getting into that space. Bank of America is thinking about creating its own stable coin, which of course would probably be backed by customer deposits. I don't know how that would work, but if Bank of America is creating their own stable coin, I think that should be pretty clear to everybody that stable coins are here to stay. It's just understanding how they function, what's the mechanics, and in my opinion, what that does is that just helps push the industry further along. It grows the industry because now we're just saying money is now digital. Now let's build infrastructure to handle those digital payment rails, and that's things like Ethereum, Cardano, Avalanche, Solana, all these different companies that we've been talking about. So pretty exciting. Nahum says, I didn't see any popcorn trade of the day action for Nvidia. Well, unfortunately, this is my popcorn trade of the day. I do have it now. What? There it is. My popcorn trade of the day is back, folks. Look at that. Bum, 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 bum. I actually uploaded it the other day and I thought it was broken. So, yeah, not a lot of real action with Nvidia, unfortunately. Here we are now in the after-hour session. It's just kind of, honestly, lame. Only up 1.37%. I mean, that's a snooze fest for Nvidia today. All right. Let me real quickly go over something. I want to make sure that I get it because I do resent this comment, and I want to make sure I don't ruffle any feathers, but I also want to make sure that we're clear on the same page. So this is from Ed up in San Jose. He says, you continue to be blindly bullish on Bitcoin, yet every day you report all the signs that are heading for a giant correction. I strongly resent the fact you say I'm blindly bullish on Bitcoin. I am not blindly bullish on Bitcoin. I am open-eyed optimistic for Bitcoin for the next 10, 15, 20 years. Incredibly bullish on an asset class that's starting to be used by people around the world, being held as an asset not only by corporations, but also reserve currencies for governments around the world. That is what I'm openly eyed optimistic on. Now, you say here, I report all the signs that are heading for a giant correction. I do believe we're headed lower. So I can still be bullish long term, but I can be bearish short term. So, You point out a lot of things here, Ed, which I think are good talking points. Talking point number one is, relying on new buyers to come in and push it higher. Well, I think, yes, you are correct on this. We are relying on new buyers, but I'm not focusing on new buyers, right? I'm focusing on adoption. And if I get more users of the system, more people that believe in what Bitcoin stands for, such as central banks, such as governments, and now once we have our banking system is now allowed to hold crypto, that opens to more adoption. a lot of people, I'm assuming like Ed in San Jose, you're probably looking at it going, oh, I don't want to touch it. It's a gamble. It's speculative. And there's a lot of people that feel that exact same way. I would say most people probably feel it's a scam. I talked to a group of Trading Academy students today, and one student in there raised his hand and thought it was a scam. And I said, unfortunately, the guy who raised his hand is correct. Most of crypto, 99.99% of crypto is scams, frauds. Now there's 30 plus million projects out there. So out of 30 million, if I take away 99.999%, I'm left with 3,000 really good ideas that have developers, technology, are building to achieve something greater that helps adapt this financial system to new digital payment rails like stable coins and central bank digital currencies. So for me, I'm not relying on new buyers. I am optimistic we're going to get adoption. I think when I say I'm relying on new buyers, it sounds like a Ponzi scheme. I'm looking at adoption, that this is a new technology that people, not just America, but people around the world will be using more and more. So that's first take. Take number 2, extremely volatile. Yeah, there's nothing I can say to argue that, and I agree with you 100%. We talk about it all the time. Crypto is the most dangerous asset class, not only from the theft and loss of private keys perspective or user error, but the volatility is off the charts. I mean, we had stuff moving 20, 30% over the last couple days. I'll go show you here. Your biggest mover today. This isn't too bad. Helium was down 7% today. Biggest gainer was Litecoin up 10% today. So there's always huge movers, and that's just part of the deal there, no problem. All right, here's where I think it's a little trickier. He says excessive valuations, no way to even judge Bitcoin's value, but certainly MicroStrategy at trading at 2 times accumulated Bitcoin is a good indicator. Yes, so we talked about MicroStrategy quite a bit, and their valuations seem a little bit wonky. I think where people are pricing MicroStrategy so much higher is because their model is raise money, buy more Bitcoin, drive up the price. Raise money, buy more. So that in itself has a huge risk element to it, which is why I'm a little bit nervous about MicroStrategy, being this black swan event potentially down the road. But yeah, how do you evaluate something like Bitcoin? There's no earnings, there's no reports coming out. You can just see adoption growth. Number 4, this time is different. A new paradigm that requires new metrics to demonstrate value. Correct. This time, I talked about this today in the class with Nikki at Trading Academy, is every year there's this 4-year cycle. It has not failed. It's 100% successful so far, and that cycle ends in November of this year. So in my mind, yeah, I think that we are going to have that same market crash. And again, I don't know why that is, but it feels like that market crash would be, pretty high probability given its historical track record. Now, is this time different? I'm torn because it's clearly different this time. We have governments involved in it. We've got our politicians are now creating favorable rulings on it, and we have our president, VP, Secretary of the Treasury, Chairman of the SEC, the House of Representatives, and the U.S. Senate are all pro-crypto. That's never happened before. So yes, the roadmap based off historical precedent is huge crash coming in November. Other than that, I just don't know. So I'm positioning myself, planning for a crash right around November. This little blip I have here, I received so many emails and messages from people today. It's driving me freaking crazy because oh my God, the bottom's falling out of Bitcoin. This is crazy. Oh my gosh. It's like, guys, look at the darn chart. If you look at this chart, this is not a market crash. This is certainly a correction. On the grand scheme of things, this is definitely a break and a bigger correction. Pulling all the way back down into those levels we talked about, that where we have the yellow box, that'd be a 30% correction. Like right now, we are officially in a bear market by market standards according to, the 20% correction. We're down 22%. That's normal for crypto. It's so volatile. This is what happens. And let's see, what was the last part? He says, herd mentality, hodlers believing it can't possibly go lower in the long term. True. I don't believe it can't possibly go lower. I certainly think there's possibility for everything. I'm a probability person. So if I line up all the different elements and variables and I have a pro side and a con side, I've got an upside and a downside, I go into both of those objectively just like I would buy a stock. If I'm making a trade, I'll have a plus column and a minus column. And even though I may be bullish on a trade, I'm just going to start with the downside stuff. Like, why would this go down? And be open and honest, because I don't want to blind my judgment here. I want to be open about it. So there certainly are a lot of factors that could cause this to go down, without question. And I'm not blind to that. But when I weigh the probabilities here and I have them lined up side by side, I've got a lot more factors for pro-Bitcoin adoption versus a complete failure of the system going to zero. And that includes quantum computing, that includes, an EMP or some hack of the system. Those are on the negative side, not very plausible. So I wanted to make sure I got to those. And Ed, I always love your feedback. I do. I had to stop when you said my blindly bullish on Bitcoin. I am not blindly bullish at all. I'm open-eyed, wide-eyed bullish. There's no, when you say the word blindly, it almost insinuates I don't know what I'm talking about and I'm throwing darts. I'm not throwing darts. I'm throwing opinions around, but I would like to think that these are educated opinions that I'm making. And again, no one here has to listen to what I say about it. I talked too much crypto over the last couple months anyway, so I'll probably scale back on that one. So what do we got here? Remembering the GBTC premium or discount before was even a spot ETF. Never did well. Yep. Yeah, it came back a little bit, but didn't go. I tried to state the reality, Big Eb. I tried to state the reality. And again, when something is brand new, this doesn't have to just be, crypto. Ozempic. Not that I know anything about Ozempic, but I'm pretty sure there's plenty of people that are slamming Ozempic because it's brand new. Does it have some good potential benefits? Maybe. I don't know. I've not researched it at all. Ozempic's not my thing. But, anytime something is new, and certainly when it threatens an industry or is outside of the norms, everyone is resistant to it. I use the example of the horse and buggy in 1856? 1858, I think, is when the first one came out. And the point was, about in 1856, if you had a horse, that was the preferred mode of transportation. I think in 1857 or 1858, Carl Benz patented the first car. It's a 3-wheeled contraption, looked really stupid. Let me bring it up. Carl Benz, first car. There it is right there. 1886. So in 1885, you had the horse. Here is what it looks like. Now imagine you're in 1886, and everything you've seen has been horses, maybe some carriages, and all of a sudden I've got a horseless carriage with 3 wheels. It's this crank steering wheel that looks really silly, right? This is new technology, right? This was groundbreaking back then, but this looks stupid, and people naysay and talk bad about, oh, that's dumb, my horse is way better, and honestly, this is a terrible vehicle today. Got no windshield, it just looks bad, right? However, what have we done? From that moment with that vehicle, from 1886 with Carl Benz's first vehicle, we took that as, okay, this is the starting point. This isn't the best thing ever made. It's a starting point. It's an idea. It's a concept. And a lot of crypto, I think, follows in that concept phase. What happens is people will look at this and go, oh, you know what? I'm eating bugs all day long. Let's put a windshield on it. Okay, we've innovated. Let's make it streamlined and aerodynamic so if it goes faster, it won't, slow down. Let's add suspension. Let's add on and we continue to innovate this model. And now we're left with something like the Tesla today, which is, full self-driverless vehicle, safer than human drivers. It's the result of 130, 140 years worth of innovation. Crypto, in that analogy, between 1886 with the first car and where we are today with a Tesla in 2025, we're like at maybe the early 1900s, like 1905. We're so early that we haven't even adopted new technologies to make these systems better. And every day there's new stuff coming out that gets better and better and better. So anyway, I'm ranting on and on. Their 5000 series is literally a scam. What are we thinking? Horrendous overclocking performance. Are we talking about chips? What are you talking about? Put a buy in for 70. Let me run through the chat here real quick, just to make sure I got. Is Bitcoin a good indicator to tell us too much money is being printed? Bitcoin? Not sure I understand that question. Is Bitcoin a good indicator to tell us too much money is being printed? I think what Bitcoin represents is more a movement away from a centralized currency. Right, the dollar is manipulated all day long by the government, manipulated by the Treasury, manipulated by the Fed. Bitcoin can be manipulated by participants, but you can't make more. You can't arbitrarily print more Bitcoin like you can dollars or take it out of society like they are doing today with the Fed. So I think there's more of a correlation between Bitcoin and gold as a flight to security, as something you can actually have ownership of and it's yours that they're not going to take away. They can confiscate your gold. They can't confiscate your Bitcoin if you have your private keys. As long as the government keeps printing money, Bitcoin will always go up and up and up. Yep, I agree with you, Robert. Yes. And again, that's because of the inflation aspect to it. And, when you look at countries like Argentina who have rampant inflation, Bitcoin represents a solution. If you get paid on a Friday, or let's say you get paid on a Monday and you hold it to Friday, you've now lost a lot of money in Argentina. That's how high inflation is. So if you have a choice in something like Argentina or a country that has really high inflation, hyperinflation, you could buy a stable coin in a currency that doesn't have hyperinflation. So if you lived in Argentina, I could buy USDC and buy $1 and keep it locked there. Or I buy Bitcoin, something that's a fixed amount. So I think digital assets help out a lot of the world, and they're starting to see that. What else I got here? Nvidia graphics card, 5,000. Oh, got it. No worries. No, Solar just was off topic. I didn't know where that 5,000 came from. Yeah, I haven't played with their new one at all. I saw the people sleeping in line for days to get the new 5,000 chip, etc. All right, so there you go. I just wanted to make sure I got that one, Big Eb. I keep saying Big Eb. Ed up in San Jose. Again, thank you for all the comments. I do appreciate it. Just definitely don't say I'm blindly bullish. I am 100% willing and knowledgeable about what my optimism is and what the future may hold on that one. Blindly means I'm shooting from the hip, and I don't believe I'm doing so. All right. Where are we at time-wise? Okay, let's go to our markets here. I'm going to go back real quick just to see if Nvidia has done anything. I feel like I almost poke it with a stick. Are you moving? Are you doing anything? Nope. Still 1.58% in the after-hour session. And all in all, our markets didn't really do that much today. A couple of these ones did. We talked about this 10-year yield, surprisingly. Broke the level yesterday. Broke our little demand level right around 4.4%. I think you're headed lower. So, again, I've said that before, but once we break these kind of key demand zones, the logical target here for that 10-year is going to be down around 4.2%. Actually, a little bit less than that, probably about 4.15 will be the next stop for your 10-year yield. And that should give a little extra juice to the markets, just from an optimism perspective. Russell 2000, we talked about it yesterday, how it closed down below that yellow box. And based off that, the expectation is that we're probably going to drift to this next stopping point of demand, which is right around 2,100. Today, we had a pretty wild range. You can see there's a wide range, but ultimately gave back most of its gains. Finished just barely positive, 0.09. Nothing, right? Almost unchanged. At one point, it had a nice gain. These are all up over 1% today. NASDAQ as well was up over 1% today. It was up 1.23% at its peak. Gave it almost all back, as you can see. And let me get this out of here. Sorry, I'm trying to get my lines off the screen. You ended up just up 0.18%. So all in all, a relatively low movement day at the end of the day, but certainly volatility during that trading session. So right now, nothing to say here other than if you are a candlestick person, you could look at what's going on with the NASDAQ as a bullish Harami pattern, although the topping tail makes it very difficult to trade off of. Gold continuing its nice move up, apart from one big down day we had yesterday, up 0.4%, 29.30. We'll see if we can get a close above that 3,000 mark here. Coming soon to a network near you. S&P was fourth place. Oh, actually, these numbers have all changed. Excuse me. Let me get there. S&P was fourth place. Oh, they're all out of order. All right, I'll just jump out of order. S&P, same thing as the NASDAQ. Picture's almost identical. It's actually not as deep in the zone as it was. So still, we're middle of the range here. Nothing to say here with the S&P. Let's see, dollar index, we already covered that. All right, we covered the 10-year. This is an interesting chart because we have this very simple stair-stepping down. It looks like 3 up days, 1 down day. 3 up days, 1 big down day, and now we have our first of 3 updates. So let's see if we get back up a little bit closer to this yellow box. I do think you're going to head down to the 105.70 on the dollar index. Even though I'm bullish long term, again, the trend is your friend to the bend at the end. And I continue this little line here to show where, if it does continue on, this is where it should end up heading, which is right down to this demand zone right around 103.75. And let's see. We already looked at Bitcoin, which is just real bad. This is the future, so the picture looks very different. Looks real bad. This does not look good at all for Bitcoin. So again, I do think you'll see more downside movement unless, Sailor or somebody jumps in and buys a bunch. The FUD, the fear, uncertainty, and doubt going on in Bitcoin right now is pretty high. So I do think you'll see more sell-off here. That would take us down to, on the futures, right around 76,000. If we go to the spot market, let's go BTC. A little bit different on the spot market. Spot market would take us down to this little area of demand, which is right around 76,500 all the way down to 74,500. So a $2,000 range there. That to me is our next logical stopping point for Bitcoin. And from current valuations, that would put you down about 10% from here. Not what we want to hear. Certainly not what we want to hear as people who are long on crypto. But again, my time horizon is much larger. If you're an active trader, this is great. If you're someone who's an active trader, these short opportunities are huge. Can you short? Yes, you can. Sure. You can go over here. I can go to derivatives, and I can short Bitcoin futures. So here's Bitcoin futures expiring the 28th of February, expiring this Friday. I can go out here, and there's even other future contracts on things like Ethereum and gold and Solana. I think they actually added oil. Yeah, they got oil futures here as well. Polkadot, Bitcoin Cash, Avalanche, Shiba Inu. I mean, you can short all kinds of stuff futures-wise right there. Sell short. So this is opportunity for people who feel like, hey, markets are going down. Great. Short it. If you're an active trader, this is opportunity. If you're a buy and hold investor, this is pain. Could I be using these futures to hedge my positions? Absolutely. Again, that's, to each their own as far as how they want to approach these markets. But a wild day. Lots of fun stuff going on. Certainly excited the way these markets are moving. I did not expect to see Nvidia do what it did. I really thought that we were going to see more of this, more of the big smile and just jubilation, excitement, and rocking to the upside. But we'll see how it all pans out tomorrow morning when these markets open up. Okay, a couple different questions. No problem, Solar. Don't be sour on Nvidia. It's okay. Look, markets function because everybody has an opinion. And we can all stand on a podium and pontificate about what we think about, Bitcoin or Nvidia or Apple or Intel or, your mom's lasagna. We can all voice our opinions about things. Trading is about putting your money where your mouth is when you pontificate about things. And I didn't make any new trades today, so nice, Robert. Which futures? Who's your instructor for futures this week? I mean, this has been great volatility. There's been some great volatility and opportunity here in the futures markets. So, and actually in all markets. Let's see. Seems like dollar yields and equity markets have been directly correlated this week. Yes. Compared to normally being inverse, correct. What's interesting, I brought up, if you go to MSCI, which is more research, I think it's MRCI, excuse me. There's this table that breaks down the relationships between the dollar index and other markets. You can see here the dollar over the last 180 days, the dollar has actually had a 49% correlation, so slightly aligned with the Dow, the S&P, and the NASDAQ. Historically, I've seen this very different. And here's your 30-day correlations. And you can see right now, over the last 30 days, a heavy inverse correlation. 49% inverse against the Dow, 60% inverse against the NASDAQ, and 60% against the S&P, and then 56% inversion against the NASDAQ 100. So this is what it should be like. There should be an inversion between the dollar index and the equity indexes. But what I found bizarre is the last 180 days, they're actually more correlated than not, which is kind of strange, a little bit odd. What else did I have for you guys? I'm looking at my comments, questions. No. All right, so I got all my things answered. Let's go into what's happening out there for mañana. Obviously, the big stuff is out of the way. You had Salesforce beat earnings as well today. You had Lowe's beat earnings. And let's go and see what's going on for Thursday session. Not a lot of big stuff. You got a couple banks here, Royal Bank of Canada, Toronto Dominion Bank, Zurich Insurance Group, but none of this stuff is really that impactful. When you get down near the bottom, you do have Dell. So Dell Technologies and EOG Resources aftermarket close, as well as Autodesk. So, some of the more active stuff is going to be aftermarket close. All right, nice. Well, say hi to Brock for me. I had fun with him in Charlotte. He's a great trader, great guy. And let's go to your Forex Factory. Where is my Forex Factory? And just show you what's happening for Thursday. Bigger stuff happening. You have our preliminary GDP numbers. Of course, as we're progressing through this data dependency era of the Fed, We know inflation's number one. Jobs, I would say, is number two. And then your third component here would be GDP. GDP helping us with that trifecta, which gets to stagflation or inflation, deflation. Right now, 2.3% is where they're expecting GDP to be at. And if you notice, historically, that seems to be about normal. If we zoom in here, it's got 2.8. That's an annualized rate. The number that you're looking at here is a quarterly rate, 2.3. So ultimately what that will do is if this continues to come out at 2.3s on the quarterly rate, that will drop your annual rate a little bit from 2.8 to lower than that. So right now it looks like GDP overall looking about 2.8%, but quarterly they're expecting it to stay at 2.3. That will bring this number down, meaning slowing economic growth. That's not a good thing. Remember, Bill Addis has told us that the thing he's concerned about most would be stagflation. He said that a couple years back, but still holds true. Stagflation is a trio of events. Number one is going to be weakening GDP slowing down, which we're seeing some evidence of that. Second component for stagflation would be high unemployment. We're not seeing that. That's not on the table, at least in my opinion, that's not on the table yet. But that may change over time with these government layoffs and AI stuff, but probably not for the next several months will we start to see more of an increase in unemployment. And then the last piece would be inflation. And we are starting to see inflation rise a little bit. Now we get that big piece of inflation data happening on Friday, which is the core PCE price index. And we'll, of course, talk more about that one when we get closer. So that is it for today. Do I have anything else here? Great earnings usually bullish. Typically, Margaret, great earnings are usually bullish. And that's why I put this graphic here, because it felt like Jensen Huang should be taking a victory lap, in the words of Bill Addis, right? He should be just going, yeah, man, we kicked booty on our earnings. And then you get the results. Like, I feel like he's kind of like this. Like, what do I have to do, man? Like, I'm working miracles over here. What do I have to do to get my stock to pop? So, yeah, he should be like this. Anyway, congratulations to the whole NVIDIA team. You guys are awesome. Keep going. Keep pushing. I want to see more and more amazing technology, innovation, and products and services that make our lives easier. Hopefully in my time here on this wonderful spinning marble through space, we don't get the Skynet and computers take over, and next thing you know, I'm fighting computers. But hey, maybe we'll get there at some point. Hopefully, I'll be on Mars at that point. All right, guys, that's gonna do it for me. Hope you enjoyed today. Thank you for the feedback. Thanks, Big Ed, for the thanks, Ed, for the comments up in San Jose. I do appreciate that. I do appreciate you always listening out there and giving me feedback. So thank you so much, and all the other podcasters as well. I read all the comments that come through. So if you have something you want to discuss, if you're a podcast person, you can always email me at TraderMerlin@gmail.com. And if you want to be part of the live discussion with my very friendly group over here, they're all always usually very kind and courteous. Every now and again, we get some crazy psycho who wants to spew a bunch of negativity, and I just go, click, click, and you're blocked. But come and watch the live show and join our discussion here. We got some good peeps that I'm sure would be happy to talk and be part of the community. So thanks, guys. I will see you guys tomorrow. If you've got something you want me to talk about, email me. I'll see you tomorrow.